Welcome to the Deep Dive. Get ready to explore a subject that might surprise you with its breadth and dynamism.
Hmm.
Accounting history.
Mm-hmm.
Forget dusty ledgers for a moment. We're diving into a surprisingly vibrant field that draws inspiration from across the historical spectrum, from economics and politics to sociology and, well, beyond. We've got a rich collection of sources that uncover some truly fascinating and unexpected aspects of this discipline.
Absolutely. And what's really fascinating here is just how multifaceted accounting history is. It's not a narrow subject at all.
Yeah.
You have specialists examining the evolution of management accounting, others applying different theoretical lenses to financial accounting, maybe a Marxist perspective looking at economic power, or, a Foucauldian lens looking at how practices shape our understanding of the world.
Okay.
And the research methods are incredibly varied too, ranging from analyzing ancient archives, like really old stuff, to conducting oral histories. This breadth lets us investigate historical phenomena from almost any angle, just through the lens of accounting and accountability.
Right. And this field, it has a history of its own, doesn't it?
Yeah.
It wasn't always the rigorous area of study it is today.
Not at all.
Initially, there was this natural curiosity about the really old stuff.
Mm-hmm.
How did ancient civilizations keep track of things?
Mm-hmm.
The development of early bookkeeping, particularly double entry in Italy, held a real fascination.
Mm-hmm.
And let's be honest, there's a certain thrill in deciphering centuries-old accounting texts. But the field has really matured since then, hasn't it?
Oh, definitely. What's fascinating is the shift towards a much more rigorous understanding of what actually constitutes historical research. Early scholars might have been driven by sheer curiosity, but today, accounting historians grapple with fundamental questions about evidence. What is it? How do we interpret it?
Right.
The theoretical frameworks we use to make sense of it, and even the way we construct our historical narratives.
Yeah.
It's really about moving beyond just describing past practices to truly understanding their significance within their historical context.
And it speaks to the field's development that you actually have professional organizations dedicated to its advancement. I was looking at our sources, and the American Accounting Association's Accounting History Special Interest Group that was founded way back in 1970.
Yeah, 1970. And then just a few years later, in 73, the Accounting and Finance Association of Australia and New Zealand formed their Accounting History Committee, which later became a section.
Okay.
And what really stands out is the shared mission of these groups. They were all set up to promote research and teaching in accounting history, to foster international communication among scholars, connect people,
Makes sense.
and to undertake that vital work of identifying, preserving, and cataloging historical accounting records. It's crucial work.
It really is.
For the Australasian group, their geographical spread actually presented unique challenges in connecting researchers, but they've still had a significant international impact despite that distance.
Now, you mentioned those different theoretical lenses earlier, and the Foucauldian perspective really caught my attention. For our listeners who might not be familiar, could you maybe give us a quick overview of Michel Foucault's approach and why it's relevant here for understanding accounting history?
Certainly. Foucault's work resonates with some accounting historians because he viewed practices like accounting as deeply embedded in what he termed discourse.
Discourse, okay.
Think of discourse as the systems of thought and language that shape how we understand the world. So accounting isn't just a neutral technical tool for recording financial data. No.
More of that.
Much more. Instead, it actively participates in constructing categories and concepts that then influence how we operate within organizations and society. Think about concepts like standard cost or the efficient worker accounting practices actually help to solidify and give meaning to these ideas.
Okay, let's unpack this a bit more. So it's not simply about recording that a worker produced, say, a certain number of units in a given time. It's that the very act of measuring and accounting for their output in a specific way contributes to our definition of what efficient even means. Is that it?
Precisely. You've got it. And Foucault also highlighted this really intricate relationship between power and knowledge.
Power and knowledge, right?
Those in positions of power often have a greater ability to shape what counts as knowledge, what gets measured, what gets recorded, what gets reported. However, the knowledge generated through these accounting practices isn't always imposed in a straightforward top-down way. It can operate more subtly, and it can even, in some instances, lead to unintended consequences or shifts in how individuals perceive their own actions.
That's a really interesting point. You gave the example of standard costs.
Yeah.
Could you elaborate on how that might play out in terms of those power dynamics?
Yes. So the implementation of standard costs, often linked to scientific management time and motion studies, it can certainly be seen as a management tool to increase productivity and profitability by setting benchmarks for worker output. That's the obvious part.
Right.
However, from a Foucauldian perspective, the very act of breaking down work into standardized, measurable tasks and then reporting on variances could also make workers more acutely aware of their individual contributions and how their time is being utilized.
Ah, so they become more aware themselves.
Exactly. This increased visibility might, in turn, lead them to question the demands being placed upon them or even find subtle ways to push back against those demands. So the power dynamic isn't always unidirectional, it's more complex.
That's a powerful way of looking at something that often feels purely objective, almost technical. Okay, let's journey back in time now to the really early days. Our sources discuss the challenges of studying ancient accounting. What makes this such a difficult area to research?
Well, the primary challenges really stem from the nature and accessibility of the surviving source materials. I mean, we're talking about inscriptions on stone tablets,
Right.
fragments of pottery known as ostraca, and papyri from ancient civilizations like Egypt.
Wow.
These materials are often fragile, they're incomplete, and they require highly specialized knowledge just to decipher and interpret them. It's not easy.
So it's not like reading a modern spreadsheet.
Not even close. And interestingly, the type of material used often correlated with the nature of the record. Literary, legal, and commercial texts were more likely to be found on papyri and ostraca, the more sort of everyday stuff,
Okay.
while more permanent, monumental, and religious records were typically inscribed in stone. Makes sense, right?
Yeah, permanence.
So consequently, researchers have to be extremely selective in their focus. You can't study everything.
It sounds like trying to reconstruct a whole picture from just a handful of scattered fragments.
Exactly. And because this ancient archive is so vast and often only accessible to specialists in ancient history, accounting researchers need to make careful choices about what lanes of inquiry to pursue.
Hmm.
A key question then becomes, how do we select what to study in a way that yields meaningful insights into the development of accounting and, accountability?
That makes perfect sense. And I also noticed a discussion in our material about using modern economic terms when we talk about the ancient world. Is that potentially problematic?
It can be, yeah. There's a significant debate among historians about whether applying modern economic concepts like state, economy, and markets is really appropriate when analyzing ancient societies.
Because they're so different.
Exactly. Much depends on the rigor of the definitions you employ. For instance, the term state can be applied quite broadly if you use minimal criteria like a defined geographical area, a population, some form of authority.
Okay.
By that measure, many ancient societies would qualify as states. But when you delve into more complex economic terms, the debate becomes much more nuanced and often, frankly, contentious.
So it's about being cautious not to impose our contemporary understanding onto vastly different historical contexts.
Precisely. The risk of anachronism applying later concepts to earlier periods is a constant concern for historians. Always.
Got it. Now, when we consider accounting for the private domain in the ancient world, our sources highlight a notable difference between Mesopotamia and ancient Egypt. What were the key distinctions there?
Well, it seems Mesopotamia had a significantly less centralized economy compared to ancient Egypt.
Less centralized, okay.
And as a result, we actually have more surviving evidence of accounting practices from the private sector in Mesopotamia. Just more stuff survived or was recorded differently.
Interesting.
That's right. The work of Metesic, drawing on earlier scholarship, examines these cuneiform tablets that emerged in the 3rd millennium BC.
Cuneiform, wow.
Yeah. And what's particularly intriguing is the identification of some of these as examples of archaic bookkeeping, even exhibiting what appear to be debit and credit entries.
Really? Debit and credit entries that far back?
That's what the evidence suggests. And on these larger tablets, the reverse side often contained a summary total that matched the figures on the obverse. Almost like a check figure.
Almost like a very early form of a balanced ledger. Did this fundamentally change how merchants understood their business, maybe compared to earlier methods?
In a sense, yes. While it wasn't a fully self-contained double-entry system as we understand it today, the increasing use of these debit and credit entries provided a more structured way to track obligations and receipts.
Okay.
Metesic argues that this development has roots in even earlier token accounting systems, suggesting a long evolution towards the interconnectedness of accounts. This provided a more holistic view of certain transactions, though, again, it wasn't yet a complete picture of overall financial position.
Right.
In contrast, the highly centralized economy of ancient Egypt, well, it's yielded less material specifically focused on private domain accounting. More state-focused records survive there.
So even in these ancient civilizations, the underlying economic structure heavily influenced the development and, I guess, the survival of accounting practices and records?
Absolutely, the context is everything.
And our sources also revisit that Foucauldian perspective, this time in relation to the invention of token accounting in ancient Mesopotamia. What's the thinking there?
The Foucauldian argument, essentially, is that the invention of token accounting in Mesopotamia had implications that went far beyond just facilitating economic exchange.
No. How so?
It suggests that this system of representing economic relationships through physical tokens fundamentally influenced how people in that society perceived the world and their interactions within it. It represented a new way of categorizing, quantifying, and ultimately understanding value in exchange, potentially shaping their very cognitive frameworks.
So the very act of counting and recording wasn't just a practical tool. It was actively shaping their worldview.
That's a powerful idea to consider. Let's move forward several millennia now to medieval and mercantile accounting. What does the accounting landscape look like then?
Okay. In medieval England, manorial accounting becomes a prominent feature. The key mechanism was the charge and discharge account.
Charge and discharge.
Yeah. Stewards, who were responsible for managing another person's property, would prepare these accounts to report on their stewardship. Crucially, these weren't just written documents. They were subject to an oral examination, the audit, where the accounts would be reviewed and any discrepancies addressed.
An oral audit. That's fascinating, the oral tradition being so integral to verifying written records.
It really was. And our sources mention a similarity between these manorial accounts and governmental accounting practices.
Did they influence each other?
Yes, the format and underlying principles were quite similar, and it's highly likely that there was a degree of mutual influence,
Yeah.
especially given that powerful individuals might hold positions in both royal administration and manage their own extensive estates.
Makes sense.
Now, as we transition into the early modern period with the expansion of trade, we see a move towards more sophisticated mercantile accounting. Account books gain significant importance as legal evidence, and we start seeing the emergence of specialized treatises on bookkeeping techniques.
And this is where double-entry bookkeeping really comes into its own, right?
Yeah.
How did this new system fundamentally change things? How did it differ from something like that charge and discharge system?
Oh, it was a transformative development, really. Double entry moved beyond simply tracking inflows and outflows, like
Yeah.
charge and discharge. It introduced a system of classifying transactions into nominal accounts, your revenues and expenses,
Okay.
personal accounts, who owed you and whom you owed, debtors and creditors,
Right.
and real accounts, your other assets and liabilities. What's remarkable is its relatively sudden appearance in Europe.
Sudden.
Well, relatively speaking, we see early elements around 1211, and by 1299, a fully developed system was in use by Florentine merchants. The interconnectedness of these accounts provided a holistic view of a merchant's financial position and performance in a way that earlier, more fragmented methods just couldn't.
So it allowed for much better decision-making.
Absolutely. A
Yeah.
clearer understanding of profitability, better control over business operations. It was a huge leap.
That does sound like a pivotal moment in the history of accounting.
It absolutely was. While some historians might suggest a more gradual evolution of the underlying concepts, the speed with which the fully formed double-entry system appeared and was adopted is striking compared to the much longer history of other methods. And the system used by, say, the Ferolfi family in the late 13th century bears a remarkable resemblance to what Luca Pacioli described 2 centuries later. In many respects, it laid the groundwork for the accounting systems we still use today.
Wow.
Interestingly, though, even with the widespread adoption of double entry for mercantile activities, charge and discharge accounting persisted on English estates well into the 18th and 19th centuries, even for industrial activities like coal mining.
Really? Why would they stick with the older system if double entry was superior?
Well, superior depends on the context. For basic stewardship, tracking receipts and expenditures on an estate, charge and discharge was often seen as adequate. But you're right, as businesses became more complex, its limitations definitely became apparent.
So what do they do?
It struggled to cope with the intricacies of extensive trading operations. So this led to the development of supplementary records. For example, Specialized coal pit books and sinking books were used to analyze output, sales, production costs, essentially providing additional information alongside the traditional charge and discharge statements.
So different accounting systems coexisted, tailored to specific needs. I also noticed a mention of letter writing being an integral part of the mercantile accounting process. That seems a bit unexpected.
It was actually crucial, especially for merchants managing businesses across long distances. Contemporary authors recognized it as a vital aspect of accounting practice.
How so?
Merchants would maintain copy letter books, and there were even dedicated letter writing manuals, like the Merchants of Viso, that provided templates for business correspondence. This allowed merchants to communicate instructions to their agents, get updates on transactions, transmit summaries of accounts, basically facilitating remote control and oversight.
It's fascinating to think about that paper trail literally connecting these far-flung commercial activities. And was there any early indication of accounting being used for more than just record keeping? Maybe for costing or making strategic decisions?
Yes, we do see some early evidence of that. John Collins' the 1697 work, The Perfect Method of Merchants' Accounts Demonstrated, provided a detailed explanation of how to apply double-entry principles to track internal transfers of raw materials, moving them from a stock account to a work-in-progress or process account.
Ah, so starting to track internal costs.
Exactly. This suggests an emerging understanding of how accounting data could be used to analyze internal operations and potentially inform decisions about production costs. The seeds of management accounting.
Okay, so we're witnessing the early seeds of management accounting being sown. Now, let's move into the next major transformative period, the Industrial Revolution. How did this era reshape the world of accounting?
The Industrial Revolution brought about profound changes. Businesses became significantly more capital-intensive, huge investments in machinery, factories, infrastructure.
All right, big money involved.
Big money. And this surge in investment created a critical need for more sophisticated accounting procedures to accurately measure profits. Not just for individual proprietors anymore, but also for partners and these burgeoning joint stock companies and other new organizational forms.
So the sheer scale and complexity of these new industrial enterprises demanded a more rigorous and detailed level of financial oversight. More accountability was needed.
Precisely. We observe a fundamental shift in perspective, moving from a primary focus on the individual owner's financial position, the proprietorship view, to an entity view of the firm as a separate economic unit.
Okay, the business itself is the focus.
Right. And this shift had a direct impact on how profit was calculated, leading to the widespread adoption of a matching approach, matching revenues and related expenses in the same accounting period. This era also saw the rise of depreciated historical cost as a key valuation principle.
Historical cost.
Yeah,
We still debate that one.
we certainly do. And later, as organizational structures became even more intricate, concepts like substance over form and consolidated accounting emerged to provide a more comprehensive view of the overall financial health of related companies.
And this period also marks the real growth and development of what we now recognize as cost and management accounting.
Absolutely. It's a particularly rich area for historical research, and there's ongoing, fascinating debate about the specific ways accounting practices evolved during this time.
Lots to dig into there.
Definitely. Our sources highlight several influential papers that have significantly shaped our understanding. They examine topics like the development of cost accounting in Britain during World War I, the concept of accounting in motion within organizations, and the role of institutions like West Point and the Springfield Armory in shaping early management practices. And of course, the later publication of Johnson and Kaplan's Relevance Lost played a crucial role in stimulating debate about the evolution and, well, the perceived shortcomings of management accounting.
The Springfield Armory connection sounds particularly interesting.
Yeah.
What was so significant about its role in the development of management accounting?
Well, Hoskin and McVeigh's research identified the Springfield Armory in the U.S. during the 1830s and 1840s as a pivotal site for the emergence of modern management techniques.
Modern management. How so?
They argue that the significant productivity gains observed after 1840 weren't solely attributable to technological advancements, but rather to the invention of managerialism itself, the systematic use of accounting norms and labor discipline to control and improve efficiency.
So using accounting to manage people and processes.
Exactly. They point to specific events like Daniel Tyler's introduction of inspection processes and revised peace rates in 1832, and the implementation of military superintendents in 1841 as critical steps in establishing a more structured, accounting-driven approach to production management. So, in essence, the deliberate use of accounting for control and productivity enhancement was a key innovation that really took hold there.
So a surprising link between military organization and the development of business management practices. But our sources also suggest that the traditional view of the British Industrial Revolution, that accounting wasn't really used for management purposes back then, might need revisiting.
Yes, that's a really important point. The prevailing view articulated by scholars like Pollard was that the systematic use of accounting information as a direct aid to management decision-making wasn't a widespread feature of the British Industrial Revolution. Kind of happened later, was the thought.
But maybe not.
Well, more recent research by historians like Edwards, Boynes, Newell, Fleischman, and Parker, they've examined the accounting records of pioneering firms like Bolton and Watt, Wedgwood, the Chorlton cotton mills.
Big names.
Big names, yeah. And their work has presented compelling evidence to the contrary. They've revealed the existence of surprisingly sophisticated costing practices being employed much earlier than previously believed.
So the picture of early industrialists operating purely on intuition might not be entirely accurate. They were using numbers more than we thought.
It certainly appears that there were more systematic attempts to understand and manage costs during the British Industrial Revolution than the older historical narrative suggested. And this wasn't solely a British phenomenon either. Our sources also touch on the international spread of scientific management principles, including Taylorism.
Right, Taylorism. How was that received and implemented in different parts of the world? Was it just copied everywhere?
What's interesting is that its adoption was often adapted to the specific cultural and economic context of the receiving country. It wasn't just a simple copy-paste.
Okay.
In the Nordic countries, for example, Taylorism gained traction in the early 20th century, leading to an increased appreciation for standard and direct costing methods, as well as budgetary control. Japan also embraced scientific management, with early adopters like Mitsubishi Electric adapting its principles to align with their cultural values.
Adapting it culturally. Interesting.
Yeah. The pursuit of efficiency was a significant driver, particularly during the economic hardships of the Great Depression and in the lead-up to World War II. However, the implementation of standard costing in 1930s Japan faced challenges due to significant price volatility and the complexities of tax laws. It wasn't always smooth sailing.
It's fascinating to see how these management accounting techniques were both adopted and modified as they traveled across different national borders. And our outline also mentions the historical context of the debate between direct versus absorption costing. Is there a history to that discussion? Seems like a technical debate we still have.
Oh, yes. The debate over whether fixed overhead costs should be included in the cost of goods sold, that's absorption costing, or treated as period expenses. Direct costing has a significant history. While our sources don't delve into the very origins, it's definitely a discussion that has shaped management accounting theory and practice over many, many decades, still relevant today.
Okay, we've covered a lot on the evolution of management accounting. Let's now turn our attention to financial accounting and the development of regulation.
Yeah.
How did financial reporting practices themselves evolve over time? What did statements look like?
Well, the development of financial accounting practice was a gradual process of refinement and expansion. It led to the financial statements we recognize today. The balance sheet, the income statement, and later the cash flow statement, statement of changes in equity, and even broader concepts like the value-added statement.
So more statements were added over time.
Exactly. And over time, the increasing complexity of business organizations led to the growing importance of consolidated financial statements, giving a unified view of a whole group of companies. We also see a broadening of the scope of accountability, moving beyond purely financial matters to encompass social and environmental performance, though that's a more recent development.
Right.
But as our sources emphasize, the balance sheet and income statement have remained the fundamental pillars of financial reporting throughout most of this history.
The core statements. And at what point did governments and other bodies start to actively regulate these financial reporting practices? When did rules come in?
Formal regulation of financial accounting really began to take shape in the UK around the turn of the 20th century. The Companies Act of 1900 reintroduced the requirement for an external audit for registered companies.
An audit requirement, okay.
Although it didn't explicitly mandate the publication of a balance sheet at that point, That requirement was subsequently introduced by the Companies Act of 1907, though still not for a profit and loss account. And it also established this principle of minimum disclosure.
Minimum disclosure. Sounds like doing the least required.
Pretty much. Stock exchanges also played a crucial role by requiring listed companies to publish financial statements for their shareholders as a condition of listing. That added pressure.
So a move towards greater transparency and accountability to investors and other stakeholders. But were these new regulations always readily accepted? Or was there pushback?
Not necessarily readily accepted, no. The inflationary environment of World War II, for instance, led some companies in the United States to challenge the long-standing practice of historical cost accounting.
Ah, inflation again.
Yep. Some advocated for using replacement cost valuation. However, the Securities and Exchange Commission, SEC, and the Committee on Accounting Procedure, CAP, largely resisted these changes, maintaining their insistence on historical cost as a more reliable basis for financial reporting.
So the regulators held firm on historical costs.
Largely, yes. This period also saw increasing debate about the most appropriate methods for measuring income, and the development of various normative accounting theories led to growing criticism of the CAP's pronouncements. People started questioning the rulemakers.
It sounds like there was a real tension between trying to reflect current economic realities and sticking to established accounting principles. And what about the cash flow statement? When did that become a standard part of financial reporting? It feels pretty fundamental now.
It does now, but it gained significant prominence much later, really in the latter part of the 20th century. Eventually, it was recognized as a fundamental primary financial statement.
Okay.
The Accounting Standards Board in the UK even characterized its introduction as a radical change in financial reporting. That underscores its importance in providing insights into a company's liquidity and solvency that go beyond just the profit figures in the income statement.
Right. It shows where the cash actually went. And asset valuation practices, like that ongoing debate about historical cost versus other methods. Does accounting history offer any insights into why historical cost has remained so dominant despite all the criticism?
It does offer some perspective. Despite ongoing discussions and the occasional experimentation with alternative valuation methods, particularly during periods of high inflation like the 1970s.
Right. Inflation accounting was a big thing then.
It was. But historical cost has demonstrated remarkable resilience. In both the U.S. and the U.K., attempts to mandate inflation-adjusted accounting were eventually scaled back or rescinded as inflation rates declined.
So when inflation went down, the push for change faded.
Largely, yes. This suggests a degree of conservatism within the accounting profession, perhaps, and also maybe a perceived trade-off between the reliability and verifiability of historical cost, which is easier to check, versus the increased complexity and subjectivity associated with alternative valuation methods.
Interesting trade-off. And what about the accounting treatment of goodwill? That always seems to be a complex and debated topic. What's the history there?
It certainly has been complex. Historically, there's been this fundamental divergence in how goodwill has been accounted for, either capitalizing it as an intangible asset, sometimes with amortization, sometimes without, or just writing it off directly to reserves.
Two very different approaches.
Very different. Lee's reviews of accounting practices back in the 1970s highlighted the wide variety of treatments being used then. Even early accounting standards often permitted this flexibility. More recently, though, there has been a global trend towards capitalizing goodwill and then testing it for impairment if its value seems to have declined.
Impairment testing instead of amortization.
Right. A practice that was actually proposed much earlier, believe it or not, as far back as 1912 by Montgomery.
Wow, 1912. So some of these long-standing debates in accounting have surprisingly deep historical roots. And finally, in this realm of financial accounting and regulation, our outline mentions the rise of conceptual frameworks. What was the purpose behind creating those?
Conceptual frameworks emerged in the US and the UK during the 1970s. They were really a concerted effort by the accounting profession to establish a more robust and coherent theoretical foundation for developing accounting standards.
It's trying to build a solid base for the rule.
Exactly. It was an attempt at normative theorizing, aiming to create a set of overarching principles and concepts that could guide the formulation of consistent and logically sound accounting rules rather than just reacting issue by issue.
Okay, that makes sense. An effort to build a more solid intellectual structure for financial reporting. Let's now shift our attention to the history of auditing and the professionalization of accountancy. Thinking about the history of auditing, is it primarily about catching fraud? Is that the main driver?
Well, While fraud detection is certainly a significant aspect of auditing, its history is definitely more nuanced than just that. There's an ongoing debate among scholars about the fundamental drivers behind the demand for auditing.
Oh, what are the different views?
One influential perspective, often associated with Watts and Zimmerman, posits that audit developed as an efficient technology, an efficient mechanism for organizing firms, enhancing the credibility of management stewardship and the reliability of financial information for investors. It makes the firm run better.
Okay, an efficiency argument.
Right. Others argue that the demand for audit is more market-driven, with firms choosing to undergo audits for various strategic reasons, maybe to avoid more stringent regulation, or to gain access to expert advice from the auditors.
So strategic choice versus inherent efficiency. Does the historical evidence tend to support one view more strongly?
If we look at the early development of audit in Britain, using the East India Company as a prime example,
Okay, way back.
way back, it suggests that investor demand played a crucial role even as early as the 17th century. Investors sought independent assurance. They wanted someone to check the books to mitigate the risk of managerial opportunism, managers looking out for themselves.
So you're worried about managers.
Exactly. Breyer's research highlights the evolving power dynamics between the company's governors and the investors, and how audit became an increasingly important tool for investors to exert greater control and obtain more reliable financial information. So, while efficiency was likely a factor, the drive for accountability and mitigating that agency risk seemed to have been particularly important early on.
So it wasn't just about making things run smoothly, but also about power dynamics and ensuring accountability between owners and managers.
Precisely. And this perspective also sheds light on those historical debates surrounding the auditor's responsibility for detecting fraud back in the 19th century.
How so?
Some historians argue that the relatively limited responsibility for fraud detection assumed by the profession at that time wasn't necessarily due to a failure to align with user expectations, but rather reflected the profession's close ties to management and large insider investors. This concept sometimes referred to as social capital.
Almost as if the auditors saw their primary allegiance as being to the management who hired them, rather than necessarily to all the external investors.
That's certainly one interpretation, yeah. Now, if we contrast this with the development of audit in, say, post-Soviet Russia, we see a very different trajectory.
How different?
There, the tradition was deeply rooted in state inspection and control. That was their history. So the transition to an audit regime based on international standards has presented significant challenges, resulting in a segmented profession with varying levels of adherence to ethical principles and professional standards.
A difficult transition.
Very. It really highlights how the historical and political context profoundly shapes the development of auditing in different national settings. It's not the same everywhere.
It really underscores how these practices are embedded within broader societal structures. And how did accountancy itself become recognized as a profession? Where did that start?
Yeah, the professionalization of accountancy has its roots in Britain, with Scotland actually taking the lead.
Scotland.
Yeah.
Interesting.
The incorporation of societies of accountants in Edinburgh, Glasgow, and Aberdeen in the mid-19th century was a key step. This was partly driven by a perceived threat to the insolvency practice, a lucrative area of Scottish accountants from English merchants.
Protecting their turf.
Partly, yes.
Yeah.
The individuals who spearheaded these incorporations were often elite accountants with strong legal and social networks. Formal organization was crucial for mobilizing resources, establishing a distinct professional identity, and ultimately gaining control over the market for accountancy services.
So it was a combination of protecting their professional interests and elevating their social standing, building a boundary around the profession.
Exactly. The interplay of economic class, social status, and the desire to regulate the market for their expertise were all important drivers. Later, we see the development of cost and management accounting as specialized areas within the broader accounting profession in Britain, marked by the establishment of the Institute of Cost and Works Accountants, ICWA,
CCWA.
and ongoing discussions about its relationship with the more established chartered accountancy bodies. There was some tension there.
And what role did the government play in this process of professionalization? Did they help or hinder?
The British state played a somewhat ambiguous role, actually. While it generally recognized the economic importance of a well-functioning accountancy profession and indirectly supported its development in Europe, it was often hesitant to grant the accountancy associations direct legal authority over auditors.
Interesting reluctance.
Yeah. And interestingly, outside the Anglo-American sphere, The relationship between the state and the accountancy profession has often been even more critical, with varying institutional and cultural factors shaping the trajectory of professionalization projects much more directly.
It's clear that the path to professional recognition wasn't a uniform one globally.
Hmm.
Our outline also points out that much of the historical focus has been on prominent individuals and professional associations, rather than on the accounting firms themselves. Why is that a significant distinction? Does it matter?
That's a crucial point, I think. While the contributions of influential individuals and the actions of professional bodies are undoubtedly important, the accounting firms themselves have also been major drivers in the evolution of the profession. They're the ones doing the work day to day.
Right.
Understanding their history, their organizational structures, their growth strategies, their internal dynamics provides a more complete and nuanced understanding of how the profession developed and exerted its influence.
And were the senior partners within these firms particularly influential in shaping the profession, maybe through those associations?
Yes, absolutely. In Anglo-American firms, senior partners often played a pivotal role in governing and guiding the development of professional associations. Their social, political, and economic connections were undoubtedly significant, especially in the early stages of professional formation.
But we don't always know much about those connections.
While many historical accounts don't delve deeply into these affiliations or analyze their direct impact on the evolution of accounting practice and regulation, it's often sort of mentioned in passing.
It sounds like there are still areas of accounting history, particularly regarding the firms themselves, that haven't been fully explored.
Absolutely. Historical research on the internal workings of accounting firms, things like how they established overseas offices, internal politics and firm culture, how profits were distributed among partners, and even the everyday experiences of those working within the firms, that's still relatively limited.
We need more research there.
We do. Oral history projects and scholarly work that examines the development of audit technologies and the evolution of audit markets are beginning to address these gaps. We're also seeing research on how firms develop and promote new audit methodologies like business risk audit, and how these techniques are used not just for auditing, but also to shape markets, influence regulatory frameworks, and even manage and control junior staff within the firm.
So the evolution of audit isn't just about developing better techniques, it's also deeply tied to the power dynamics within the firms and their interactions with the broader regulatory and economic landscape.
That's fascinating.
Let's move on to another vital aspect, the history of accounting education. Where did formal accounting education even originate?
Well, the earliest forms of accounting education have very deep roots, actually, predating modern professional structures. Institutions like religious organizations, monarchies, empires, they all had a need for individuals with accounting skills for administrative purposes. Someone had to keep track of things.
Right, basic administration.
In early medieval England, for example, the church was the primary provider of literacy, but access to the specialized administrative skills needed for accounting was generally limited to a relatively small segment of the male population.
And the emergence of universities played a significant role later on.
Yes, the rise of universities in the 12th and 13th centuries was a crucial development. They contributed to the growth of a learned class and fostered this concept of a service ideal associated with specialized knowledge.
Okay.
Over time, the authority to grant licenses to practice various professions, including accountancy, gradually shifted towards these learned bodies. So, the development of pedagogy, the methods and practices of teaching accounting knowledge was fundamental to establishing modern accounting professions. How you teach it matters.
And how did professional accounting bodies utilize examinations as part of their educational and professionalization efforts? Exams seem key.
Examinations became a central tool, yes, a way for professional bodies to control entry into the profession and maintain standards. However, different organizations adopted different approaches.
How so?
For example, the Association of Chartered Certified Accountants, ACCA, historically had a more open access policy compared to the older, more elite institutes like the ICAEW in England and Wales.
More open access.
Right. The ACCA's reliance on written examinations aligned with this broader access, providing opportunities for individuals who might not have been able to afford or secure traditional articles of clerkship, the apprenticeship model. Their educational strategy was key to their professionalization project and developing their own distinct professional identity.
And the ICAEW.
In contrast, the ICAEW traditionally placed a greater emphasis on that articled training, and later a stronger focus on university graduates as the primary entrance to the profession. More exclusive, perhaps.
So education served not only to impart technical skills, but also to shape the very identity of the profession and determine who could join its ranks. It was a gatekeeping mechanism, too.
Absolutely. And is there an ongoing discussion about the relevance and structure of accounting education today? Does history inform that?
It seems like a perennial debate.
It is. There's a constant debate about striking the right balance between academic rigor and practical relevance in accounting education. Ensuring that accounting graduates are well prepared for the demands of professional practice is always a concern.
The academic versus practitioner view.
Exactly. The way accounting curricula are structured often reflects the different specialized areas within practice, but there's this ongoing tension between ensuring a broad academic foundation and providing the specific skills that practitioners demand. This tension has historically fueled debates about the requirements for professional accreditation.
And institutions played a role.
Yes, in the UK, for instance, the establishment of polytechnics in the late 1960s with their focus on vocational education played a significant role in providing accounting education that was closely aligned with the needs of the profession, and they developed strong ties with organizations like the ACCA.
It sounds like the evolution of accounting education has been a really dynamic process, shaped by a variety of social, economic, and professional forces. Now, let's take an even broader perspective and look at the connections between accounting, society, and some of the wider themes highlighted in our outline. The relationship between accounting and the state seems particularly significant.
It is absolutely fundamental. Accounting is deeply interwoven with the functioning of the state. It's a key component of various accountability mechanisms that govern societies.
Like what kind of mechanisms?
Well, we see examples of constitutional accountability, hierarchical accountability within government bureaucracies, and stewardship accountability, all being mediated and expressed through accounting practices. Historical evidence of these relationships can be traced right back to ancient civilizations.
So it's always been there.
Pretty much. And interestingly, significant shifts in accounting technologies and practices are often accompanied by, and indeed can be framed as, debates about the very nature and scope of accountability within society. Who is accountable to whom and how? Though, it has to be said, much of the existing literature tends to focus on Anglo-American context.
Right, a common bias. And what about the military's relationship with the development of accounting practices? We mentioned Springfield Armory earlier.
Yes. Initially in Britain, military accounting was primarily focused on ensuring parliamentary oversight and control of military spending. Especially after the turbulent political and financial history of the 17th century, Parliament wanted control.
So control, not efficiency.
Primarily control, yes. It wasn't primarily aimed at enhancing military efficiency or performance initially. However, the experience of warfare, particularly World War I, played a crucial role in the development and professionalization of cost accounting techniques.
Why WWI?
Largely due to the massive increase in government intervention in the economy and the sheer need for efficient resource allocation to support the war effort. Necessity was the mother of invention there.
So wartime necessity acted as a catalyst for advancements in how businesses tracked and managed their costs. Another crucial societal link is with taxation. How has accounting history approached the relationship between accounting and taxation?
That relationship can be examined from several perspectives. Is taxation just another cost that businesses need to account for? Is tax accounting a completely separate discipline? Or is the process of taxation deeply intertwined with and influenced by general accounting practices?
Good questions.
Accounting historians have explored the historical development of how businesses account for tax-related costs, recognizing tax expenses, recording tax liabilities, managing tax cash flows, dealing with things like deferred tax. It's also vital to understand the underlying assumptions embedded in tax policy itself and how these assumptions are interpreted and applied in different historical and economic contexts.
Context matters again.
Always. And there's a growing call for accounting historians to engage more actively with historians in other fields who study taxation as a crucial site of social tension, political negotiation, and societal change. It's not just numbers.
It's about recognizing that taxation isn't just a technical exercise, but something deeply embedded in the social and political fabric. Our outline also touches on some other fascinating societal themes that accounting history has begun to explore. What else is out there?
Yes, the field is really expanding into some interesting areas. Research on gender, for instance, has examined women's entry into the accounting profession, although there's a recognized need for a more integrated consideration of gender across all areas of accounting history, not just as a separate topic.
Right, integrated more.
Studies on race and ethnicity have begun to explore the experiences of early African American CPAs and also the disturbing role of accounting in historical injustices like genocide and colonialism, how accounting enabled or documented those things.
Difficult but important topics.
Very. The intersection of religion and accounting has also been investigated, looking at accounting practices in ancient Egyptian temples or religious brotherhoods, which challenges this notion of a strict separation between the sacred and the profane.
Accounting in temples.
Absolutely. Even literature, how accountants are portrayed in novels and visual culture, like the design and content of corporate annual reports, have been analyzed through the lens of accounting history. It's getting quite broad.
It's remarkable to see the breadth of societal issues that accounting history can shed light on. And finally, our sources mention a Marxist critique of some postmodern interpretations within accounting history. What's the core of that critique?
Well, the central argument of the Marxist critique is that some postmodern interpretations of accounting history, with their emphasis on fragmented narratives and decentralized perspectives, they can sometimes obscure the underlying material realities and socioeconomic power structures that Marxists believe are fundamental to understanding historical developments.
So postmodernism misses the big picture of power and economics.
From a Marxist perspective, yes. They argue these fundamental power relations and the material conditions of production remain the primary drivers of historical change, and postmodern approaches might downplay that.
Okay, we've covered a truly vast landscape in our deep dive into accounting history today. It's clearly a field with far more depth and relevance than just, studying old bookkeeping methods.
Absolutely. It's a field that reveals surprising and insightful connections across time and disciplines. From the influence of ancient Mesopotamian counting systems on modern accounting principles,
Yeah.
to the profound impact of wartime regulations on the development of cost accounting, and the complex interplay of social, political, and economic forces that have shaped the accounting profession as we know it today.
It really does make you reconsider how you view accounting, doesn't it?
Yeah.
Understanding the historical context of these practices and regulations provides an invaluable lens for analyzing the challenges and debates we encounter in the field today.
Precisely. It encourages us to look beyond just the technical mechanics of accounting and to consider the broader societal implications of how we measure, record, and report economic activity, why we do it the way we do.
So here's a final thought for you, our listener, to mull over. Given this rich history of interplay between accounting, power, and societal values that we've talked about, how might current megatrends, things like rapid technological innovation, AI, increasing globalization, how might they shape the future of accounting and accountability?
Good question.
It's worth reflecting on the long and fascinating journey of accounting history as we navigate the complexities of the present and contemplate the possibilities of the future. Thanks for joining us on The Deep Dive.